Opened up more or less mixed early this morning as concerns over the ongoing coronavirus outbreak continue to weigh.
Never seen a period of such outperformance of America versus the rest of the world in history.
Is this start of a short covering move on the index, because the index is still heavily short? The FI exposure yesterday itself moved up from 16% to 21%.
As of Tuesday, the first time that there were more than 100 deaths reported within one day. But the statistics, according to China, suggesting that the infections could level off in the coming months.
It's 0.3 higher for the Nifty and the Sensex.
I think we are looking at a fairly significant economic recovery over the next 12 months.
Definitely some amount of follow-on buying, at least for the frontline indices, similar to what we saw yesterday.
You would find that the performance has been good. You will also see that overall the mood of the CEOs is very positive.
The company was looking to shed off some kind of assets. They have been looking more at operational viability as well as in terms of improving margins as well as other things such as reducing debt.
92 points on the Nifty. We are at 12,200. So looking very, very solid.
Very solid indeed. And once again, the power of short covering is visible with the way the index has rallied today and perhaps the way the mid caps have underperformed. But really, it's been all about the index and the large caps and the way the markets moved on once again, and this time crossing the 12,150 resistance with some convincing power, and that's something which should enthuse the bulls going forward as well. Ekta, hi, good afternoon.
Hi Anuj, yes, afternoon. You know, it seems like deja vu because we had this conversation yesterday as well. Today we are seeing that follow-on buying coming through, very similar in terms of a pattern, in terms of what we saw yesterday with the mid-caps underperforming.
Yeah, so, like we discussed yesterday, Ekta, that, when you asked me whether, you should be happy or, not happy with the close. Overall, I think it was a day which clearly yesterday also belonged to the bulls, and this morning's data told me that, we are in for powerful short covering, because short covering started yesterday from the FI side. They're still aggressively short on the index. So I think there's still a lot more that could happen, especially on the Bank Nifty. I think if you see the Bank Nifty now, it's now crossing the 31,500. So it's been just remarkable the way the markets moved on. And yes, it's large cap specific. So, names like, and the leaders are coming back. ICICI Bank is up 2%. Kotak Mahindra Bank is up about 1%. Reliance over the last 2 days is showing some move. HDFC, though, of the highest point, but that made a move in trade today. Lever, look at the move in Hindustan Unilever, 5% higher on that stock, fresh all-time high. I mean, the biggest stocks have moved up today, and that's always, something which will pull up the index. Infosys, so all guns blazing right now for the index.
Yes, absolutely. But what about the mid-caps? We saw this underperformance yesterday. We saw the advanced decline ratio weak yesterday as well. That hasn't been able to see that sort of momentum pick up.
Yes, and I think that's second day running now. So yesterday was okay. In fact, if you see the top traded list, that's all red. But I guess it's okay because, the shorts are in the index. So what you're seeing right now is index short covering. Even yesterday, if you see the institutional data, there was not too much of buying from institutions. So in the cash market, I think mid-caps move up when you have some serious cash market buying. That needs to happen. That's not happening. So right now, it's just about some short covering.
Okay, so it is generally about the frontline indices at this point in time, and also numbers which are flashing on your screen. That's PFC for you, where the revenue is up around 11% on a year-on-year basis. We also had ABB numbers which was reacting negatively because there's a one-time loss of around 69 crores which has taken place for ABB, but the revenue is absolutely flat. So both the numbers in terms of a reaction should come up. ABB, in fact, at the low point of the day, down around 3.4%. And for PFC, also a negative reaction probably to the net profit, which is down 19% on a year-on-year basis. But any which way, we have a lot lined up for you in the next 60-odd minutes. So let's tell you what we have with us to take you through the show. First up, markets are near the day's high, with the benchmark indices up over almost 1%. Mid-caps lag in trade. We discuss these key trends and market fundamentals with Mr. SP Tulsian of sptulsian.com and independent market expert Ambrish Baliga and Himang Jani of Sharekhan. From the NASSCOM Leadership Summit, we'll get you excerpts from our conversation with the big three of Indian IT giants. And how should investors navigate this volatile market? What's the long-term view on the Nifty? We'll track the technicals and get you some stock ideas with Jay Bala of cashthechaos.com. And as always, our technical experts will take you through the key trading strategies for the last hour of trade.
Okay, those are the visuals of the three big Indian IT stalwarts together on one platform. There you can see Rajesh Gopinathan of TCS. Actually, that's in Chandra right now that you can see on the screen. And apart from Chandra, I think we'll have Rishad Premji also joining us in a bit. We'll cut across to that in a bit. Shireen Bhan, of course, will be in conversation. But yeah, there you can see Rajesh Gopinath in the background. I think you can see there he is. Rajesh Gopinath is also there, and Rishad Premji is also there. So that conversation in a bit. But for now, let's move on and address the market. How should you position yourself in this last hour of trade? We have Mitessh Thakkar and Prakash Gaba now joining us. Good afternoon. Mitessh, it's been a strong follow-through after yesterday's decent move. Your thoughts on the index and your stock calls?
Yes, Anuj, I think it's also nearly met the targets of 12, 230, 250 zones. So we've kind of trailed our stop loss even tighter because, as I said, I think this still looks like a market which is not expanding, and therefore I think we are most likely heading towards the upper end of the range. That could be 12 to 30, 250 zone, or if that has been cleared, maybe the recent highs of 12,360, 370 could be revisited. That's the hourly closing I'm talking about. So I think we'll take it step by step. I don't think this is a market which is showing extreme strength, and hence I think this could take its own time to move. For the time being, I think trading is more stock specific basis, and on the index we had a long call in the morning, which, as I said, I think the stop loss has been trailed. So I have a buy and a sell. Muthoot Finance is a sell if it breaks 739, keep a stop at 751, look for targets of 715, and ICICI Bank is a buy with a stop below 541 for targets of 565.
Okay, well, Prakash also joins in on the show. Prakash, what are your calls at for today?
Well, I feel that Nifty, it's okay as long as 12,180 holds. Upside maybe around, who knows where it goes, but looks like as it's going up for the last couple of days that I'm seeing, looks like not very comfortable in Bank Nifty, so I think there'll be doubt up there. I like two stocks. Castrol looks good to me, very good chance. Castrol can climb to 160 zones. Stop below 150 should be fine. And I also like ICICI Bank, very good chance. It can climb to around 552 zones, stop below 543.
Okay, fair enough. Let's now discuss some more stocks. SP Tulsian of sptulsian.com and Amrish Paliga now join us. Mr. Tulsian, good afternoon. I wanted your thoughts on this stunning move in Hindustan Unilever. It's just been one way since the numbers, but up another 5% today, all-time high. What's the call on the stock now?
See, Anuj, to justify this 5% rise, I can narrate all the positives that the dividend distribution tax has seen, the good positive, and in fact we have discussed this on the 3rd of February, Monday, when Asian Paints and HUL both were up by about 5-6% on that day as well. But I think that if you see the bias of the Nifty, probably Nifty and Bank Nifty both are seen to be quietly in an oversold position, and just to trap you need some heavyweight to really move up in this market, and probably the HUL bias, HUL up move is seen to be giving positive bias to the strong hands, because you need safety as well to remain invested in the stock. Because if you go by the GSK merger, in fact this is what I have been saying for last 6-8 months, that and GSK numbers having come out, GSK Consumer I am referring to, that the merger already Chandigarh NCLT hearing has happened, the order has been reserved, and just to give you an incremental the dilution of the equity which will happen by about 28 crore will see the profits increasing by 100%. That means it is EPS accretive, and if you take that, I don't think that one can really doubt the expectation of about 42 rupees as the EPS for FY21. Now come on this merger, as I say that this merger is just maybe about 45 days away when you will see the shares of GSK Consumer getting extinguished. GSK Consumer again is sitting on a cash of about 3,500 or maybe 4,000 crore, because they have an annual PAT run rate of about 1,100 crore, and Hindustan Unilever always have the history of distributing or dividend payout at 95% or maybe 98%. So once this merger will happen, which again probably may coincide with the end of March, when the book closure, when the record date will be announced. By then, one can expect a huge dividend to be seen declared by the HUL also. So probably people are expecting that maybe 3,000-4,000 crore cash will get distributed of the GSK consumer lying in the books, and this will be seen very good EPS accretive, not for FY21 going forward. The health or the food malt, the malt business, Horlicks and Boost kind of things will really be seeing the good growth driver for the HUL going forward. Apart from their own verticals doing quite well. I have concerns on the soap segment, because if you see the palm oil prices have increased because of this Malaysia ban, but that is across the board with all the soap makers, whether you talk of Godrej Consumer or whether you talk of Hindustan Unilever. But I don't think that probably maybe they will take a price hike, because all these FMCG players were seen to be very aggressive in pushing the volume growth in Q3. So overall, if you take the scenario, I think GSK merger and cash dividend payout, of which can run in a huge amount, is seen to be a kicker for the HUL to really move up, and also to see the Nifty move higher to trap the shorts also, which are so by only pulling the HUL, you have the comfort where the Nifty can also get pulled up, and the comfort by buying the shares in HUL as well ahead of the GSK merger announcements.
Okay, so that's on HUL, which is at an all-time high. Amrish Valika also joins into this conversation. Amrish, we had the ABP numbers some time ago. Did you manage to have a look at it? And what's your
just had a glance. I mean, numbers, although were not too great, but then looking at the order book position and the order which they also recently won, I think that is what will keep the stock, interested by the investors. So I think the downside may not be too much from here. I think it's a stock to be held on.
Amrish, good afternoon. What about Kotak Mahindra Bank? What's the call on the stock?
Kotak Mahindra Bank, I think, any sort of a fall is clearly an opportunity to buy, because clearly, I don't see the stock falling more than 50-60 rupees from here. And as far as promoter stake and all that is concerned, I think there is clarity on that as of now. So I think the downside seems limited.
Okay, downside seems limited. By the way, just this move on gas stocks is once again quite interesting, though it's already now at the high point of the day. But Mr. Hussain, your thoughts on this move that we are seeing once again on MGL and IGL? Of course, MGL is where valuation comfort is there, but just thoughts here and the kind of move once again we are seeing?
Anuj, they have seemed to be in the grip of the quality investor, and yes, you are right. In IGL, you have the extremely double-digit volume growth, while in case of MGL, you have the comfort on the valuation parameters, because MGL has shown a volume growth of about 1.5 to 2%, while the IGL has shown a volume growth of anywhere between 12 to 15%, depends on the CNG and PNG. So yes, going forward, and in fact, the spot prices are seen to be falling quite low, and in fact, if you take a call on both the companies, they buy it in the spot. They don't enter into the long-term contracts, and they are able to, due to that, they are able to conveniently increase the margin. Plus, the expansion of the outlets are seen to be happening. So maybe because of this, but if you really take a call on the both this thing, I think MGL as a proof for the prudent investor, based on the valuation parameters, may not be a bad idea to invest. Though IGL is obviously is seen to be the front runner, or maybe the darling of the investors amongst the gas space, because of the huge volume growth.
Anuj, you were talking about HUL, but there are a lot of these FMCG companies which are at fresh 52-week highs. So, for example, Asian Paints, GSK Consumer, Dabur, all of these stocks which are now either at fresh all-time or fresh 52-week highs.
Yeah.
Do you think there's this shift towards defensive?
No, I think it's too premature to call it that. I think every company has got its own triggers. In general, yes, sector is doing well. Dabur, I think, is because of that Morgan Stanley note, where they expect Dabur to come into the Nifty. Dabur's commentary was very weak actually. The numbers were quite okay, but the commentary was very weak. So in a sense, a lot of people are surprised, but perhaps it gets into the index at some point. So that's why you're seeing this kind of move. Lever, of course, we've already discussed. So I think it's stock specific, but yes, suffice to say that there's a bit of a sectoral move, but it's not new. It was happening whether it was risk off or risk on. Lever has done well regardless of whether the market's gone through, bad times, good times. It's one stock which has been making all-time high. So that's been a go-to stock. And Avenue Supermart has been, despite expensive valuation, a go-to stock. So I think perhaps just fancy for these stocks. Let me put it this way. Amrish, you want to comment on this?
In fact, there's one FMCG stock which hardly anyone is looking at is Imami. And there were reasons, clearly, because promoter issues were there as far as the pledge was concerned. Last year, we had a longish winter, and because of which the sales also were affected. This time, I think both are out. The winter wasn't as severe as what we saw last time. And a promoter issue also has been sorted out to a large extent because of the cement sale. So I think this is one stock which has underperformed, could be a dark horse.
Okay, fair enough. Let's do one thing. We'll take a break. We'll come back and talk about some medium-term technicals with Jay Bala of CashTheChaos.com. Stay tuned.